So hello class, welcome to another discussion for accounting for business combination. So this is actually still in continuation for accounting for stock acquisition at the date of acquisition. Okay, so in the previous video we have discussed how to prepare worksheet and provide working paper eliminating entries needed for the preparation of consolidated statement of financial position or balance sheet at the date of acquisition. But in the previous video we have discussed worksheet and provide working paper eliminating entries for 100% stock acquisition or a wholly owned subsidiary. So in this particular video, we shall be discussing um, uh, still worksheet and provide working paper eliminating entries for partially owned subsidiary or yung acquisition less than 100%. Okay, so for illustration, we have here, no, Peer Company acquires 80% of Sky Company's outstanding stock on January 1, 2014 by paying 300,000 cash and immediately prepares a consolidated balance sheet. So Peer also pay 12,000 indirect cost to accomplish the purchase. Okay, so the separate balance sheet of the two companies, meaning si Peer and Sky, no, at book value is presented here, no. Also, the fair value of Sky's assets and liabilities. Okay, so it will be noted that there are assets and liabilities of Sky na nag-differ yung fair value niya at saka book value. So, for example, yung inventory natin, di ba, undervalued by 15,000. Yung land natin is undervalued by 60,000. And then yung buildings and equipment natin, it has a cost of 600,000 with related accumulated depreciation of 300,000. Therefore, we have a book value of 300,000. And then, yung fair value niya is 290,000. Okay, so therefore, yung buildings and equipment natin is overvalued by 10,000. Okay, so yung accounts payable naman natin, no, so okay lang, equal yung book value sa fair value. But yung bonds payable natin is understated siya by 35,000. Therefore, yung ano natin, yung fair value of our net assets, meaning assets less liabilities, is 330,000. Okay, that's total assets of 565,000 less liabilities of 235,000. Well, our book value natin, that's actually total assets of 500,000 and liabilities of 200,000. Or net assets of 300,000 at book value, or is actually the sum of Sky's equity accounts. Therefore, we have a 300,000 book value and 330,000 fair value of our net assets. Therefore, we have net undervaluation of 30,000 in our net assets. Okay? So, since we do have two methods, diba, of measuring goodwill and non-controlling interest, we have the partial or proportionate approach and then full or fair value approach. So, we'll first discuss partial goodwill approach. So, under the partial goodwill approach, diba, the NCI is measured at the NCI's proportionate share of the acquiree's net identifiable net assets. So the NCI therefore does not get a share of any equity relating to goodwill. So again, di ba, walang shares the NCI sa goodwill of partial goodwill. So the only goodwill recognized is that acquired by the parent in a business combination. So hence the term partial goodwill. So according to PFRS 3, using the measurement of NCI, NCI share of equity based on the NCI's proportionate share of the acquiree's identifiable net assets. Now, based on the given data and information, di ba? So we can will compute na the goodwill and non-controlling interest assuming partial goodwill. So we have here the consideration divides 300,000. Then the fair value is 330,000, diba? Okay? So, therefore, yung non-controlling interest natin, diba? Under partial goodwill, the non-controlling interest is NCI's proportionate share in the identifiable net assets of the subsidiary. The fair value of identifiable net assets. Okay? So, it's actually 330,000 times 20%. So, you have here 66,000 as your non-controlling interest, no? So the sum of the consideration transferred plus the non-controlling interest is actually 366,000, and then the fair value of our net assets is 330,000. So we have a goodwill of 36,000. So you take note that walang share si non-controlling interest sa goodwill. The goodwill is only allocated to the controlling interest. No, since 'di ba, yung partial goodwill daw is actually computed based on the proportionate share, no? So pwede din 'di ba na to compute for goodwill, you can actually um uh, deduct the fair value of our acquired net assets, which is actually 80% of 330,000. Then sa consideration transferred of 300,000. So that's actually still a goodwill of 36,000. Okay? So how to record the acquisition, no? So of peer company, no? How to record. So to record acquisition, that's simply a debit to investment in Sky Company, no? And a credit to cash, no? So kasi nga, di ba, pag sa acquisition, the investment will be debited, the acquisition will be debited in an investment account, okay? So debit investment in company, credit cash. And then, the acquisition related cost will be debited to retained earnings, or credit tayo ng cash for 12,000. Okay? So, we have 3 working paper eliminating entries. No? So, first entry is to eliminate the equity account. No? So, you have here, i-eliminate natin yung equity account, di ba? Yung book value ni subsidiary is 300,000. It's actually the sum of its equity account, that's common stock at 200,000, additional paid-in capital at 20,000, and retained earnings at 80,000. So ito yung equity account ni subsidiary, no? Therefore, ito yung book value niya. Okay? And then, it shall be credited to investment in Sky Company and non-controlling interest. Okay, so itong investment in Sky Company and non-controlling interest shall be credited based on control percentage. So in this case, di ba, we have 80%. So 80% for the controlling and 20% for non-controlling. Therefore, ang i-credit natin sa investment sa company is 240,000. That's 300,000 times 80%. Then i-credit natin sa non-controlling interest is 300,000 times 20% or 60,000. No? So the second entry is actually to recognize the undervaluation and overvaluation of our assets, undervaluation and overvaluation of our assets and liabilities. Okay, so based kanina, di ba, we have determined that the fair value of our net assets is 330,000 and then the book value is 300,000. Therefore, we have net 30,000 na undervaluation of our net assets. So, to recognize, simply we have to debit the undervaluation of inventory of 15,000. Then yung buildings and equipment natin is actually overstated by 10,000. So, yung buildings and equipment natin, dapat ma-eliminate yung related accumulated depreciation. Okay? Ma-eliminate yun siya. So, therefore, the whole accumulated depreciation is debited at 300,000. While the buildings and equipment, since diba, the fair value of the buildings and equipment is 290,000. So to reflect, no, since the cost is 600,000, to reflect na the to reflect that the fair value is 290,000, therefore buildings and equipment shall be credited at 310,000. So yung effect ng debit accumulated depreciation and credit buildings and equipment is actually mag-decrease ang value ng buildings and equipment by 10,000. Kasi nga, di ba, buildings and equipment is overvalued by 10,000. Okay? Yung land naman natin is undervalued by 60,000. And then, yung difference ng fair value of your bonds payable and then its book value shall be credited to premium on bonds payable by 35,000. So again, the net undervaluation, no, of our net assets is 30,000. Okay? So, yung 30,000, i-share yan siya ni controlling and non-controlling interest. Okay? So, yung non-controlling interest, that's 30,000 times 20%, that's 6,000. And then yung investment in Sky Company, that's i-carry that at controlling interest at 80%. So, that's 24,000. Okay? Then, our last entry is to recognize goodwill on acquisition. Okay? So, to recognize goodwill on acquisition, di ba, under partial goodwill, okay, under partial goodwill, the goodwill is 36,000. That's why we've debited goodwill 36,000 and credit investment in Sky Company at 36,000. So basically, the purpose of this working paper eliminating entries or worksheet eliminating entries is to first eliminate the equity account. Okay, and then recognize the undervaluation, overvaluation of assets and liabilities, no? And then to recognize goodwill on acquisition. Okay, so if we've plot that, no, in our worksheet, so yan. So this is actually the separate financial statements of peer company, no, and also the separate FS of Sky Company, no, after the acquisition. Okay, so yung separate FS ni peer company, have noticed that, diba, naka-debit na yung investment in Sky Company at 300,000. Also, diba, yung cash niya, that's from 350,000 less yung 300,000 na acquisition, and then in cash, and then 12,000 na acquisition related cost. So this is actually the separate FS of peer after we have recorded the entries for the acquisition. Okay? So, the purpose of our worksheet is to prepare consolidated financial statements at the date of acquisition. So, simply, dito sa consolidated column is actually i-add mo lang yung balances ni Peer and Sky plus or minus, no, the effect of the working paper eliminating entries. Okay? So, first, we have cash, di ba? Yung 38,000 plus 50,000, na wala man siyang entry, no? For nasa elimination, so you have 88,000. Yung accounts receivable natin, actually, that's actually 75,000 plus 50,000, that's actually 125,000. Yung inventory natin, di ba? That's 100,000 plus 60,000 plus 15,000 is actually 175,000. Yung land natin, 175,000 plus 40,000 plus 60,000, that's 275,000. Yung bilis equipment natin, that's 800,000 plus 600,000 minus 310,000, that's actually 1,090,000. Tsaka yung goodwill natin, that's 36,000, no? We've recognized goodwill, 36,000. So, ang balance is 36,000. Of course, the investment in Sky Company will be totally be eliminated in the consolidated balance sheet. Okay? Then, for ang accumulated depreciation, no, is we've debited 300,000, so the balance is 400,000. Yung accounts payable natin, that's 100 plus 100, that's 200,000. Yung bonds payable natin, that's 200,000 plus 100,000, that's 300,000. But we've recorded premium on bonds payable at 35,000. Okay? So, we take note that the equity account of Sky, diba, was eliminated, no? We have that in our first eliminating entries, no? So, para ang ma-forward is yung ano na lang, equity account ni parent, which is 500,000 for common stock, paid in capital na 50,000, and retained earnings at 238,000. Okay? Again, so we noted that then also the non-controlling interest will be presented in the consolidated balance sheet. Okay, or consolidated statement of financial position. Okay, same as goodwill, no? So the goodwill and also the non-controlling interest will mag-appear lang yan sila in the consolidated financial statement. So hindi mag-appear si goodwill and non-controlling interest in the separate financial statements of both Peer and Sky, or the parent and the subsidiary. Okay, so we have here our non-controlling interest, no? We have 66,000. Okay. So, actually, the purpose of our, diba, of our working paper eliminating entries is to First, di ba, eliminate the equity account, no? Yan siya, eliminate equity account of the subsidiary, and then also eliminate the investment account, and to recognize the undervaluation and overvaluation of our assets and liabilities, and to recognize goodwill and non-controlling interest. Okay, so from your worksheet, you can actually easily prepare na a consolidated statement of financial position or balance sheet at the date of acquisition. Okay, so what you have to do is to get the balances in your consolidated column of your worksheet. No. Okay, so have here your total assets is 1,389,000. So take note that nag-reflect sa assets yung goodwill, which is 36,000. Okay? You also have your liabilities, no, consolidated, and also yung stockholders equity natin. Okay? So si non-controlling interest, no, will be presented of course in the stockholders equity next to the controlling account, next to the controlling or the equity attributable to the owners of the parent. Okay, so ito siya, yung equity account ni parent, no? Plus the non-controlling interest. That's actually the total shareholders equity. Okay, so our next is we have what if we do have full goodwill. So pag full goodwill tayo, di ba, may share si non-controlling interest sa goodwill. Okay, since we do have a consideration transferred of 300,000 and we'll use full goodwill and there is no given fair value of non-controlling interest, diba? We have to estimate the fair value for non-controlling interest. So how to estimate? Of course, diba? You have to divide your consideration, no, the 300,000 consideration, divide 80%, multiply mo ng 20% to get the non-controlling interest, which is 75,000. Okay, so therefore, the sum of the consideration transferred plus the non-controlling interest is 375,000, and the fair value for net assets is 330,000. You have a goodwill of 45,000. Also, yung allocation ng goodwill, since sa full goodwill, may share sa non-controlling interest sa goodwill. So, the goodwill is actually, di ba, yung partial goodwill is 36,000. Then yung share ni non-controlling interest, non-controlling interest sa goodwill is actually 9,000, no? So out of the 45,000, 36,000 yung allocable to or allocated to the controlling interest, and 9,000 naman yung allocated kay non-controlling interest. Okay? Okay, so whether full or partial to record acquisition is actually the same, di ba? Kasi mag-defer lang man yan sila, yung full at saka partial, in the consolidated financial statements. Kasi in the first place, si goodwill at si non-controlling interest, mag-appear lang yan sila in the consolidated financial statement. Okay? So, we have here the working paper or the worksheet eliminating entries on January 1, 2014, assuming full goodwill. So, actually, yung entry natin is actually same for the first entry and the second entry. The first entry is just to eliminate the equity of the subsidiary, and the second entry just to record the undervaluation and overvaluation of the assets and liabilities of the subsidiary at the date of acquisition. So yung third entry natin is to recognize the goodwill. Then sa partial goodwill kanina, there's no share. Walang share sa non-controlling interest sa goodwill. And their full goodwill, the total goodwill of 45,000, may share na, di ba, si non-controlling interest is actually 9,000. So in the third entry, so mag-debit ka lang ng goodwill at 45,000, credit ka ng investment in Sky Company, that's actually the controlling interest, share ni controlling interest at 36,000, and then the non-controlling interest is 9,000. Okay? Yan siya. So, ang effect niya sa working paper natin, no? So, still, nag-defer lang tayo. So, yung working paper eliminating entries natin, actually, di ba, nag-defer lang tayo with the third entry. Yan. Kasi may share si non-controlling interest sa goodwill. So, under full goodwill, di ba, our non-controlling interest is 75,000. No? and then our goodwill is 45,000. So the balances of the consolidated column, whether full or partial, is actually the same except for the goodwill and the non-controlling interest. So, dyan lang mag-differ yung consolidated column natin. And then, if you wanted to prepare consolidated balance sheet or statement of acquisition, at the date of acquisition, so you can actually still refer to the consolidated column in your worksheet. Okay, so up here, di ba? So its total assets is 1,398,000. Okay, you take note that the goodwill is 45,000. Okay, no, and then the non-controlling interest is actually 75,000. Okay, so that ends our discussion for accounting for business combination at the date of acquisition. So we'll have more videos, particularly on accounting for business combination subsequent to the date of acquisition.